Hello everybody, welcome to the February, Monday, and Tuesday, 3rd through 4th price review. So getting started, we are looking at the weekly time frame. We have the NASDAQ, the S&P, and the Dow. Now as outlined on Sunday, I said I wanted to see this TPD act as a continuation TPD. So this would be candle 2. As you can see, there was an SMT between candle 2 and candle 3 immediately upon the open, which price used for Monday and Tuesday, which we will get a little bit deeper on. Now looking at this time frame, you can see that the actual weekly candle for what is showing, price is not trading at this level all the way down here. The candle is kind of miscorrelated with the price action, so it's a little bit off. And the color of the candle isn't really showing what's really there, and why it's always important to keep in mind the close of candle 1 and the open of candle 3 having a Kraken correlation, because this proves to you right here that the color of the candle really doesn't hold much meaning. It's more so the Kraken correlation between the candles that holds the value. Whenever it comes to just the color of the candle having a Kraken correlation, all that's telling you is that a TPD might be there. But if there's no Kraken correlation between the close of candle 1 and the opening of candle 3, then it is not a valid TPD. So going on to the 4-hour time frame, as you guys know, outlined on Sunday, we outlined this SMT right here that was sequential between the weeks of the month, and that caused us to expand higher as we expected. Now shortly after creating this Kraken correlation, we formed a 4-hour TPD right here. So we had a monthly cycle sequential SMT and then a 4-hour TPD confirming that as well. And after this TPD formed, we had a change in the state of delivery on this candle. So you see how it runs real fast away from the opening price and closes above it really well, along with these other assets. Even though this isn't down closed, these candles aren't, this candle right here still closes substantially higher to that closing price of this candle and the opening price of the candle on the Dow. So like I said, the colors of the candles don't really mean much. It's the actual Kraken correlation that you guys can see. So after we have a monthly cycle sequential SMT and a 4-hour TPD with a change in the state of delivery confirming it, what are we expecting? We expect an SMT skip, which would be a daily cycle sequential SMT. Now, shortly after that monthly sequential SMT was confirmed by a TPD and we had that expansion, we formed a 4-hour fair value gap. Now, as explained in the Core Concepts series, whenever you have a 4-hour fair value gap, you want to see a daily cycle sequential SMT form inside of there. So that offered even higher probability to look for this daily cycle sequential SMT that formed. And the actual time that it released was at 10 a.m. So news release made that sequential SMT, the Dow took the low, and then the NASDAQ and the S&P made the failure swings. But the NASDAQ made the failure swing inside of that gap. And the S&P also had a tiny little gap in there, which you can go back and look at, but I don't think it's notable enough to add to the chart just because of how tiny it was, but it was there. And right after the Dow made that SMT, and you're probably wondering, well, why doesn't this candle count as the SMT? What did I teach you guys way earlier on is that if an SMT forms, and that candle that forms the SMT kind of gives just a tiny wick creating the SMT, then it's likely to be ran through one more time, which you guys have seen. And this is the 1, 2, 3 drives pattern that I get asked a lot. So this is commonly when you'll see that 3 drives pattern, is whenever you have that SMT that gets formed, which is the smoke screen. It just wicks through there just barely, and then it comes back, revisits it, giving that real stop run, and then makes the real move. Now, after we had that sequential SMT form, we had a 15-minute TPD with the Dow. So this was down close candle with the S&P. down close candle with the NASDAQ, but keep in mind there is a cracking correlation between the close of candle 1 and the open of candle 3. So you see on the Dow, this would be candle 1 right here. So this is candle 2, the TPD. This is candle 1, that closing price, and this opening price of candle 3. That's where the real cracking correlation lies. Now, looking a little bit deeper, going from the 15-minute time frame to the 5-minute time frame, within that 15-minute TPD, these 3 candles right here, I believe it's these 3 right here, these compose of that 15-minute candle. And then this opening price right here would be the 10-15 candle. So by looking at that TPD that formed on the 15-minute time frame, we can automatically assume that the Dow is going to be stronger for upside movement. And going from a 15-minute time frame, dropping into a 5-minute time frame, as soon as that next candle opens up, which would be candle 3 retraces into this opening price, which would be the opening price of that 15-minute candle. This is a true order block. So Dow, being the strongest, as soon as candle 3 opens up, retraces into this opening price right here, which would be a true order block, while the S&P and the NASDAQ make a smaller, lower time frame SMT in the process. Now, what you want to do is, since I'm just introducing this idea, go back to TPDs where it wicked you out, where it stopped you out and then ran without you, and look for this phenomenon right here, where the strongest asset for the direction you're trading is retracing into an order block, while either the other asset or the other 2 assets are making a lower time frame SMT on top of that. And this is just an idea to introduce to you guys. And this plays a part with the reversal model, which you guys will be getting this month. So now going back to the 4-hour time frame, as you guys can see, I have the advanced premium and discount sequence marked out for the previous daily range. And there was a fair value gap that formed from the expansion of the SMT that was confirmed by a 2-stage SMT being a true reversal, and price retraced into that fair value gap and then continued higher. So why am I using this range right here? Why am I using Monday's range? That's what you're probably wondering, because I get so many questions on this. The only time you want to use the advanced premium and discount sequence is whenever you have an already established true reversal and you want to see a continuation off of that. So looking at the NASDAQ, and yes, if that next quarter opens up, since we're using the weekly cycle quarters for our advanced premium and discount sequence, if that next quarter opens up, trades a little bit above the highest high or the lowest low that you're using to look, you would account this for the range. Now, if it were to continue higher and higher and higher and higher and higher, you wouldn't want to count that. But if it just barely runs above, like in this example, this high right here, and then trades back lower, then it would still be valid to put your premium and discount level from the highest point to the lowest point, just taking this small little price leg into account. So as you can see, there was this fair value gap, and yes, this was in premium, but price still traded into discount and then continued higher. But look at how the bodies respected this fair value gap, and look where price really traded into before continuing. Same thing goes for the S&P. The S&P had its gap form both in premium and discount, but price traced into discount before continuation, and the same thing goes for the Dow. Now going from the 4-hour time frame to the 1-hour time frame, we also had a 1-hour fair value gap in there as well, which formed in premium, and then we had on the S&P that same hourly fair value gap formed in discount. So this is a crack in correlation between the gaps. And this is exactly why the NASDAQ was stronger today, forming what most think is an SMT, which I don't really classify it as that. But whenever you have 2 time frame fair value gaps overlapping each other, like you see right here, for this example, it was a 4-hour fair value gap and a 1-hour fair value gap overlapping each other, following along with the advanced premium and discount sequence, that is very, very, very high probability. And that's why price retraced and then continued higher, because we already had that narrative established with that monthly cycle SMT being confirmed by daily cycle SMT being a two-stage true reversal, price expanded. So if we wanted to encapsulate the continuation on that, then we would plot our advanced premium and discount sequence and look for pre-existing PD arrays that were a byproduct of the expansion, which is exactly what we saw. And in here as well, there was a 90-minute SMT right at the open, I believe, which was another thing tipping its hand for price to expand higher. And now as far as where I think the market is still likely to draw to, these relatively equal highs over here on the NASDAQ still have my eye. Same goes for the S&P. So hopefully you guys found this one insightful. I will speak with you all again tomorrow. Good luck and good trading.